Hi everyone, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Monday, May 20th, and we are now in the final hour of the trading day. As many of you know, I prefer to make my trades during the last hour because I feel that the prices that are the nearest to the end of the day are the most valid, and therefore the best price to make my decisions on as far as entering and exiting a trade. So the format of today, as always, first of all, we're going to run the legal disclaimer, and then we are going to take a look at my current positions, when I got in them, why I got in them, and how I'm going to manage them going forward. And then after that, we're going to take a look down through my watch list. We're going to go through each stock in my watch list and see if there are any interesting setups to possibly enter at the end of the day. And then after that, when the market is closed, I'm happy to answer any questions that you have about the day's activity, or if you'd like me to look at a particular stock, I'd be happy to give you my humble opinion about what kind of shape it's in. So after the market closes, any questions, happy to answer them for you. So, all right, well, let's go ahead and run the legal disclaimer, get that out of the way, and I will be back in 40 seconds. So hang tight.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
All right, good. We got that out of the way. So anyway, we're having an interesting day in the market today. The Dow Jones is down 135 points, about 0.5%, but the Nasdaq's really getting whooped up on today. It's down 121 points. It's down 1.5%, and the S&P is down 23 points, so about 0.83%. So we are definitely having a down day. Let's take a look. Friday, if you were on, you probably noticed that the podcast got cut short. My electricity went out. There was a lightning strike, and it just zapped my electricity. It came right back on, but all the connections were severed, and so anyway, apologize about that. Actually happened earlier again today, so hopefully we'll make it through here without too much trouble today. All right, so let's go ahead and take a look and see what my current positions are and how we're going to manage them going forward. All right, so DDM. I got into DDM on the 15th of May. The reason I got in was because the prior day closed below the 200, and the day that I entered closed above the 200. This is a good back-tested, profitable system over time. So I did get in here at 45.28. I did hit 2 profit targets the next day as it went my way. My profit target on this is the this blue line here, 46.81. So we're down. We're about break even on the trade now, but I was able to sell 20% up here, so it is a profitable trade, and that's why I'm such a big fan of phasing out. So moving forward, how am I going to manage this trade? Well, either to the upside. If it gets to the 50-day moving average, rejects it, I would get out. If it moves up higher and closes above, I would keep it and continue to phase out. To the downside, if I have a close below the 200-day moving average, I will just go ahead and get out of the trade. But as you can see right now, we're roughly even where we bought it, but because I phased, it is a profitable trade already. So that's why I'm big fan of phasing. All right, let's see what else we have. All right, so Facebook. I bought Facebook here on the 16th of May. The reason I bought it was that we closed above all the moving averages and immediately actually went against us. Have not hit any profit targets whatsoever. My initial stop on this is a close below this large bar, because large range bars to the upside tend to have some intrinsic support about the halfway. So if we were to close where we're at right now, I would go ahead and just lock in this loss. And but we'll see. If it closes back above here at the end of the day, if we have some kind of rally, I will stay in it. But currently, as it is now, I'm just going to go ahead and get out of it at the end of the day. All right. So that's Facebook. AT&T. I did buy AT&T here on the 15th of May. I bought it when I actually probably should have bought it here on this day, but I just didn't notice it because we took out that previous fractal. We moved strongly above the 200-day moving average and then above all the rest of the moving averages. So I did buy it here. Did have some nice phase outs over the last few days. As you can see today, had a big monster bar up. I set my profit target for here, here, and here. I got out of 2 profit targets when it gapped open. This one shows here, but it actually filled here, and then one here. I wish I would have put in a couple more profit targets. I would have got them up there, but that's, that's a crazy day. That was a huge rally and then a huge move down. So you can see, once again, it was a good idea that I phased out because I've got prices higher here, here, and then this one's a little higher than that. But anyway, really nice trade. I think, what are we so far? Yeah, 2.72%. But again, I got filled much higher up here too. So, this is probably looking closer to a 3% trade. Not bad in 3 days, right? But today, this blue line here is the 70 RSI. And my exit signal tells me that if during the day the price goes above the 70 RSI and then closes back below the 70 RSI, that is my signal to get out of the trade. So unless today we close back above this 70 RSI, I will definitely be just locking in the profits. So really nice trade. Glad I phased out when I did. And so, yeah, thanks AT&T. Mount Doji. Hey, how you doing, sir? Hey, I'm really glad you stopped by today. Hello. Hey, Dr. Jorgensen, AT&T kangaroo tail forming. Boy, I'd say this is a major kangaroo tail. So, yeah, I will be getting out of this trade today because it did test the 70 RSI, immediately rejected it in a strong way. So, we'll be getting out of AT&T. Okay, SPY. So as many of you know, I purchase the SPY every evening and I sell it first thing in the morning. Just real quick, since 1993, if you would have bought the SPY on the open and then sold it on the close each day, you actually would have a negative 5.2% return since 1993. But if you did the opposite and you bought on the close and sold on the open the next day, your return would have been 568%, meaning that more than all performance from 1993 came in after hours trading. So that is why that is one of the trading methodologies that I follow. Where's my picture again? So as you can see, over the long term, it has had a really nice profitable return, but there are moments, sometimes years, literally, where you have a drawdown in this system, but you can see over time it has been profitable. So I will continue to just use this as a everyday trade, and after a year we'll take a look and see what kind of results we have. I have been using this for a month and a half so far. I've definitely had a drawdown, but I'm still up net from using it. So it's a good idea to, when you trade, to have several different trading approaches. You don't want to have too much of like a technology stock or too much of one sector in the market, but you also don't want to rely 100% on just one methodology of trading, in my opinion. So I like to have multiple systems to help smooth out the equity curves and the drawdowns. When one system's working, maybe the other one isn't, and vice versa. So on Spider today, I did buy it here on Friday, got out here at the open. We are lower than where I sold out of it, so that's good at least. And so we'll be buying it again today. All right. So Visa, I did short Visa on Friday. On the 17th of May, I shorted it right here near the end of the right near the close. And why did I short this? I don't short many stocks. I think this is the first stock that I've ever shorted on the live stream. But the reason I shorted is, back here we had this high. It tested the previous high. It went just a little bit higher than the previous high and immediately rejected. And I don't know if any of you are familiar with Linda Raschke. She has an approach called a turtle soup and a turtle soup plus one. But essentially what a turtle soup is when the price action of one day takes out a previous high, immediately goes back down, closes back in the old range. This is the old range. Anything above here is the new range. So that was one of the factors of why I shorted this. The other factor was, if we look at the high here, look at the reading of the RSI. See how high the RSI reading is down here. Now over here we make a newer high, but look how low the RSI reading was. Theoretically, this should be, the RSI reading here should be equal to or higher than here, because it went higher and the RSI was further down. So this is a divergence. This is when a high is not being confirmed with a reading. The other reason is that you see the ATR bands. You see how this is the third ATR channel. You see how we were above the third ATR channel when we made this high. Now we make this other high. See how we're not even to the second ATR channel? The third ATR channel is way up here. So these are all indications that that's a short-term top, and that is why I shorted it. My stop will be a close back into the new range. You can see today I already have hit one profit target to the downside. Here's my second one to the downside. Here's my second one to the downside. Now because we're shorting, we know that the 50 RSI is going to be some type of support. So that is actually my profit target to the downside, is the 50 RSI. And that's going to change each day. But for today, this is where the 50 RSI is. So if we get down here, close below, I will continue to keep it. If we get down here, it rejects it, closes back above, that will be my signal to go ahead and just lock in profits to the downside. So anyway, it's been a good little trade so far to the downside. And like I said, this is the first short trade I've ever done on the podcast. Generally I don't, but this kind of just jumped right out at me and told me there's a lot of signals going on there. There's a lot of indicators telling me that that's a short-term top. And so far it is. So we'll continue to see, we'll continue to monitor this. If it does move back above into the new range, I will cover my short. And then I'll also be aware of any price action. Let's say it goes down, has a strong V1, V2 on high volume, something like that, that would also be a signal for me to get out of my trade to cover the short. So, all right, so that's Visa. Let me take a look real quick. Hey, Frederick, how you doing? Nice to see you. Dr. Jorgen says, I hope everyone switches to T-Mobile. Why's that, Dr. J? And Ramble Ron's here. Hey, Ron, how you doing? Thanks so much for stopping by. I appreciate it, my friend. All right, so let's get on to Verizon. All right, well, I bought Verizon here on the 16th of May. And why did I buy it? Well, here we have a fractal. Here's a high with two lower highs to the left, two lower highs to the right. The day that we bought it, it took out the fractal. It triggered that fractal. MACD went positive. It was on decent volume. Moved above the 5, the 10, and the 20 moving averages. And you can see, I think we hit 3 profit targets on Verizon on Friday, and then we hit another 3 today. Now, I put my limit orders in here, here, and here, but it gapped open to here. So we got some positive slippage. So basically, we got out of everything here. So we're out of about 60% of the position. It's been a really nice trade. It did test the 70 RSI intraday, and it definitely looks like it's going to be closing below. So I will go ahead and just exit the trade. But again, you know, another reason for phasing out. You have 1, 2, 3 profit targets here. 2 of them I got out higher than where the price is now. Obviously, I wish I would have put some more in, but I usually just put in 3. It's hard to hit 3, let alone 6 in one day, but you never know what happens. But anyway, this has been a really nice, profitable trade since we've bought it, especially because the market, you know, the markets have been down the last couple days, and we've still been able to make a profit. So, really happy with Verizon. Dr. J says, oops, I mean American Express. Always try to make on my day off. Good. All right, so just real quick again, we're going to be holding DDM unless it closes below the 200. Facebook will be getting out if it closes below halfway of this bar. AT&T, we're going to be I'm going to be closing out, taking my profits on AT&T because it tested the 70 RSI and then rejected it. S&P, I'll be buying this at the end of the day. Verizon, we're short. My initial stop is going to be a close back over here. If it keeps going down, then I will trail it with the moving average to the upside. And then Verizon, it did test the 70 RSI and thoroughly rejected it. So I will be locking in this trade as well. All right. So, you know, I wanted to show you something. And I found this pretty interesting. I saw this on Twitter, and it really does kind of speak to me. But you know the Scooby-Doo thing where they always find out who the guy was. But now it's time to find out who's been sabotaging your trading. Well, you know, and it's him. He's been sabotaging his own trading, and it's so true. You're your own worst enemy in trading. That's why, you know, I repeat this every day, but I do it for a reason because I want it to sink in. But you got to create your plan. You got to base your plan upon, you know, good trading fundamentals. Find a plan that suits your personality, the time of day that you want to trade, so forth. But get yourself a plan and then stick to it. Don't get in there, fiddle with it, and sabotage your trading. But if any of you have been trading for a while, you will know that this little cartoon here really hits home because it's you that sabotages your trading. So get yourself a plan, make a commitment, just stick to your plan, and I promise you, you're going to do better than if you just start shooting from the hip and get all impulsive. So, all right, so that's that. Let's take a look. Well, I'm happy to say I'm having a nice green day today, even though we are down, thanks to AT&T and Verizon and the short on Visa. So, all right. Let's get to. Oh, sorry. Real quick. Speaking of phasing out, I always talk about phasing out. And what I'm going to do is I'm going to grab a link here real quick. I did a video this weekend about how I phase out and what the formula is that I use to phase out. And let me just go ahead and put it here in the chat. So, if you get a chance, I think it's about 40 minutes, but if you get a chance, watch that video. I detail in there exactly what the math formula is as far as how many shares I'm getting out, what percentage of my shares I'm getting out, and at what levels that I'm getting out. So anyway, I hope that's helpful. But if you get a chance, take a look at that. Let's see. Frederick, not good. Get ejected by a trade at minus 25% because Money Waters got short on it. My emergency saved me 8%. Ah, boy. Yep. It's tough, Frederick. But it looks like your emergency stop helped. So at least you saved something, right? Okay. So let's get down and see what we have going as far as potential trade at the end of the day. Apple. So Apple is kind of in a bit of a purgatory right here. I would really like to see this. It's at a 3287 RSI. I would really like to see this close below the 100 and then back over, or close under the 30 RSI at some point during the day in the future and then have it close back over. Whenever you have the price line up at the 100-day at the same time as the RSI is in the 30 range, it's a pretty sweet spot. It's a good dip buy. It really gives you a good risk to reward ratio kind of setup. But as it is right here, right now, let's see, did it get below 30? No, it didn't. I would feel a lot better about this trade if I could see that it was going to test the 30, reject it, and close back up. So I'm going to just sit on my hands on this trade. It is tempting for sure. Dr. Jordan says, do you think your phase out plan would work for getting out of a relationship? Possibly. I think so. If you watch the video, I may have mentioned something about that in there. I'm not sure. Not a bad idea though. All right. So Apple, I'm going to sit on my hands. I'm really going to wait and see if we can get at least go under the 100-day and then back above, or under a 30 RSI and close back above. I think that would give us a good risk to reward ratio. So I'm just going to sit on my hands. I'm just going to wait on Apple. Amazon has bounced off the 50-day moving average, which is positive, but it's still under the other moving averages above it, and it's under a 50 RSI. So I don't think I'm going to be interested in Amazon. Boeing, we did make this low here. We rallied up to the 200. Looks like it's been sold off after that. I would really like to see this come down a couple more days, maybe get a V1, V2 to the upside, or just a close back above the 200-day moving average. Because if we get a close back above the 200-day moving average, we'll have a higher low underneath us. This first one, I'm always skeptical when you have these V's, because a lot of times the people that bought here are going to sell here. That's going to drive it down. And then I like to wait for the second move up. Because now the sellers are gone. A lot of you probably have heard this, down, up, down, and then buy. But why? Why is that pattern working? You just see the pattern, you don't really want to blindly follow. But the reason it does is because people buy here, they sell here, goes down, it's still strong enough not to go all the way back down, moves back up. Now all the people that bought here, sold here, those sellers are out of the equation, makes it easier to move up. So nothing on Boeing. At the very least, I'd have to have this close back above the 200-day moving average. Alibaba, this is somewhat interesting right here, folks. We are at 29.66. If this does close back above the 200-day, if this closes back above the 30 RSI, I will consider taking a long position in this. And it will definitely be a half position because we're under the 200-day moving average. And even if it does go my way, I don't expect it to go my way for a week or two, probably 2 or 3 days. This is like a snapback. It's like if you take a rubber band, pull it, let it go, it's going to snap back. We've stretched the rubber band pretty far down here, and right now we are under the 30. But if it's strong enough to close back above the 30, I would consider buying this at the end of the day, half position. I got hit by two ATR stops today. Going to review my entries for red lights I may not have seen. So your stop was 2 ATRs away from your entry, Johnny, sounds like, which is a decent place to put it. Honestly, it is. Sometimes they get hit, but at least you didn't put it so close that it was within noise. 2 ATRs is 2 times the expected move. So, all right. So I'm going to be watching Alibaba. Caterpillar, nothing there. Canopy Growth. I'd sure like to see this close underneath the 200-day and then back above. It's dovetailing with the third ATR channel. So, the difference between one day can make a huge difference in a trade. If I bought it here, tried to anticipate it, and then the next day it goes down, well, I'm underwater, right? It's better to just wait and have the market confirm that it's doing what you want. So, it's starting to get in that area, but I'm not going to second guess it and try to anticipate. Cisco, it's holding pretty strong, based, compared to the rest of the market, but I wouldn't be buying it here. DDM we know what we're going to do. We're going to get out under the 200. Dow Jones, I did buy this here when it went underneath the 30 and then closed back above the 30, similar to what we're talking about with Alibaba. I did phase all the way out to here with my phasing strategy. And then I did exit this on Friday. I didn't like that Friday tried to get above the 1 ATR channel and the 10 ATR, the 10 EMA, and lost them both. So bought here, phased out to here, exited here. So it was a nice profitable trade. And good thing I did because we're down today. Moving forward, maybe a rejection of the 100-day moving average here, or right now we're setting ourselves up for a fractal. Here's a high, 2 to the left, 2 lower highs to the left, 2 lower highs to the right. I would want to see this move above a test of the 100 or the 200, or a close back above the 50. Those would be my parameters. Etsy. Well, this is a nice looking V1. If you remember what V1s are, this day, the current day, takes out the previous low and then rallies back above, and it has to close above the previous day's close. That's a V1. This is a V1. You do have, in a sense, now you do have a higher low. You did test the 100-day moving average, and you have this V1. The only thing that I don't like is that it's not a 50 RSI yet. It's still a 46.97. So that 50 RSI is still going to be kind of hanging over its head. So anyway, I think I'm going to pass on this. Facebook, that was my stop there. So close below halfway of this bar. I'll just go ahead and take my lock my loss in on that. 5 below. Again, this is a nice V1. Went lower than the previous day, and it looks like it's going to close higher than the previous low. Oh no, I heard the thunder. I hope we don't get zapped out. If we do, I really apologize. So would I buy it here today? I mean, boy, it's a lot of volume. It's really strong. Look at that. But it's a 42.83 RSI. I think I'm just going to let that one go. If it comes down tomorrow about halfway, then I would consider it, because then my risk is smaller and my reward is higher. But right now we're at a 42.72 RSI. Most likely it's going to go to here before it finds some resistance, if it even continues to move up. So I don't like the risk to reward ratio. Gold, actually did buy gold here when we had the 520 cross, got out of the half of the position here. It did close above the moving average here, is why I kept it. And then Friday it puked on us, but because of the phasing, this is actually a break-even trade. So now the 5 is down below the 20-day moving average. So nothing interesting on gold right here. Google. Well, boy, you know, we had that strong move up on Google. It did go above the 50 RSI and then close back below the 50 RSI. So I have a friend of mine bought it down here because it went at the very, very low RSI. Then it moved up here, tested that 50 and rejected it, and that was the exit point. You can see these lower lows, when they hit that 50 RSI, many times they will come right back, and that's exactly what it did. So, you know, what would we do with this here moving forward? Well, it is above its 200-day moving average, which is positive, I suppose. You know, we can take a look at this and see. I don't like that it's come down, but if it does close above the 200-day moving average, it does give us a pretty good risk to reward ratio. You know, gives us a reward up to here, and even a penny or two close back below, we would get out. So, and it looks like it's recovering the 200-day moving average. So that does make sense. Yep, Mount Doji will definitely, well, we're going to be looking here at Microsoft in a few minutes. It's on the list. All right, so it's possibility with Google. Goldman Sachs, just moving sideways. Nothing really we can do with that. IBB, which is the NASDAQ biotechnology. You know, this is an interesting setup, not today, but big picture. We have a low, we rally, we make a lower low, but you see how narrow or how shallow these bars are even at this low, even though it's lower than this low, and how deep they are here. This is what's called a double bottom, bump, bump, with a bullish divergence, meaning these bars go down less than the first low. Now, we did make a lower low. We did bounce up to about the 50 RSI. Now we're moving back down. So if tomorrow we were able to trigger a V2 entry here, or even a V1, if even it came down below and then moved back up, that would be a really good setup. So we'll watch that for tomorrow. Intel is getting whacked up on again today. I don't know if you remember, but we bought Intel right here when it closed above the 30-day, and then next day we got out. It was hard to take the loss, right? But we had to follow our rules, and look what would happen if we would have not followed our rules. So, you know, this is just a good example of create your plan, say if this happens I'm going to do that, if that happens I'm going to do this. And the plan was, if it closes under the 30, get out, and that's what we did. And look what would happen if we would have stayed in. Russell 2000 lost to 200, bounced a little off the 100-day, nothing really exciting there. Coca-Cola, you know, we did break out into a new range, and now we're back into the old range. I mean, this still looks fairly positive, but I'd like to see this start to move sideways, go down, reverse, get a V1, V2 to trigger us back into the trade, but nothing today. Lockheed Martin did break out to a new high at one point today, but it was not able to hold it. It's a 6588 RSI, so not interested in that. MasterCard, stronger than Visa. Good thing we're short the Visa. You know, it came back into value. It's moved up. It's kind of moving sideways. So there's really nothing there at the moment. Merck, well, the relative strength of Merck is good. It's holding up much better than the rest of the market. So that's positive, but there's really no entry signal right now on Merck. All right, Mount Doji, let's take a look at Microsoft. So, well, we came back down to the value zone. We've rallied back up. Now we're back in the value zone. On the plus side, we are holding we're at a 54.54 RSI. That is a good sign. What would I like this stock to do for me to really get interested in this? At the very least, I'd like to see the bars move sideways for the next couple days. Small bars, not tall range bars, but just small bars. Then stab down, have that price rejected, reverse back up and get a V1 or a V2. That would be one scenario. The other scenario would be if, you know, there's a chance that we could come down here and we could test this 50-day moving average. It's an upward sloping 50-day moving average. So if we were able to test that either intraday or end of day, I think that would probably be the best possible spot. You know, also if we came down, tested this low and reversed back up, that would also be. But where it's at right now, I don't like that we've gapped down. We haven't been able to recover. I think very likely it's going to at the very least go down and test the channel or this low. Don't know for sure, obviously, but that would be my guess. So I would be a little concerned about Microsoft just buying it here. I mean, it is a 54 RSI. You know, if you wanted to anticipate that it would hold this 20-day moving average, it wouldn't be the worst trade because you do have the 50 underneath you and you still are holding the 20. And then if it closed below the 20, you could just go ahead and use that as your stop. But I would rather see it wash this out or test this 50-day. Netflix, you know, we had that rally, but now we've given it all back. I would like to see this get down to the third ATR channel or the 200-day moving average. Nike, well, Nike is setting itself up as a fractal with a high with two lower highs to the left and two lower highs to the right. For me to get interested in Nike, I'd like to see it get back down here to the 200, test that 200, and or break to the upside. A break to the upside would be fine here, especially with this fractal forming, and that would put it back above a 50 RSI. So nothing right this moment. Philip Morris, you know, acting stronger than the rest of the market, but I don't see anything here that would really get my interest. PayPal had that nice move up. We've kind of dripped down here, but nothing too interesting here either. So the Qs are at a 40 RSI. Boy, I'd sure like to see that get down to here. This would be the sweet spot, folks, because then we would have a 30 RSI at the same time we have a confluence of signals with the 100-day and the 200-day. Let me test drill, see what would it take to get down there. Let's see. Don't you wish I could do this with your stocks? Just make them go like that. Yeah, if it gets down there, it would be a 30 RSI. So you know, there are a lot of traders at this moment that are thinking, I'm not going to buy this unless it gets above the 50-day moving average, or I'm not going to buy it until it gets down below. So there's two groups, right? There's momentum buyers to the upside, and there's deep dip buyers to the downside like myself. But right here, where it's at right here, there's not a lot of buyers. You know, they're going to wait till it goes higher or lower before they step in. And sometimes it's a self-fulfilling prophecy. that it might be magnetically drawn down here because no one's going to step in and buy until it gets down there. So I do know that there will be buyers in this area, and it's always a good idea to, when you want to get into a stock when you know other buyers are going to be around. So nothing on the Qs. Okay, so silver. Silver was under the 30 RSI today at one point. Wait, let me just make sure. I'm pretty sure though. Yeah, it was under the 30 RSI today. So now it's back above the 30 RSI. That is a positive sign. What's another positive sign? Another positive sign is we closed below the third ATR channel, and now we're closing, it looks like we're closing back in the channel. And the other signal we have never really talked about, when you have a gap and the next day, in the next 3 days, you take out the high of the gap, that is also a decent signal as well. So this is under the 200-day. If this does close above the 30 RSI, I will buy 1/2 position today. S&P, we're going to buy that. Folks, give me 1 second. I'm really sorry. I'll be back in 30 seconds. I have to move the dogs around here with the UPS guy. Just give me 1 second. I apologize. Okay, sorry about that. Thanks for standing by. Okay, so SPY, I will be buying that at the end of the day. AT&T, again, rejected the 70, so I'm just going to go ahead and lock in my profits on AT&T. Bonds been moving up. Seems like they've hit a bit of a wall to the upside here. Not that I would short this. But it does look like it's stalling, so nothing on bonds. Tesla, boy, really sank today. It was actually below the $200 mark, which is pretty significant. Has had a rally back up. We're at a 25.75 RSI. My guess is that it will test the 30 RSI above it, and that will be some major resistance to the upside. So I wouldn't want to do anything with Tesla here. Natural gas did gap up big, reverse, so nothing for natural gas. You're right, Bruce, I do. I need somebody to a sub, what would you call it? Somebody fill in for me when I have to go move the dogs. So oil, it's up a little bit, just moving sideways. Visa, we have. Looks like it is rallying back a little bit. We are short, but we did hit one profit target. The VIX is holding above the 50 RSI. It's up 1.16% today, so nothing on VIX. Verizon, again, we will be getting out of Verizon because it tested the 70 RSI and then moved back down. But that's been a really nice trade for us so far. Oops. Energy just moving sideways. Real estate had a bit of a big move down. My guess it's going to hold some support here, then possibly try to rally, and then if it fails there, my guess is they would then have a move back down. But just a guess, not sure. But you did see that the 50 RSI did hold some support there. And then healthcare really not doing much. All right, so let's take a look and see our flag symbols and see what we're going to be doing. So Apple, I needed to go higher or lower. Alibaba is 29.70. I will be buying a half a position of Alibaba at the end of the day, if and only if it closes above the 30 RSI. Again, using the analogy of the rubber band, you pull a rubber band down far enough, it's either going to break or it's going to snap back hard. And it's a good analogy here. This may break to the downside or it may snap back hard because it has been pulled pretty far to the downside. So my plan, if it closes above the 30 RSI, I will be buying a 1/2 position in Alibaba, which equates to a 5% position size. My full position sizes are 10%. My half position sizes are 5. Google, if it closes above the 1144.94, I would consider it. But I'm not 100% sure. Let's look intraday here. So you can see it gapped in the morning. It's been holding the entire time, which is positive. I mean, that is positive for sure. It is holding the halfway of this large bar, which is also positive. Yeah, let's just see how it closes. And then silver. Yep, you're right, Bruce. Definitely does have a negative MACD, but generally anytime you're in that 30 range, you're always going to have a negative MACD, because when you're in the 30 RSI range, you're buying a deep dip, and therefore the MACD is gonna be negative. All right, so most likely, so we'll get rid of Apple. We'll watch Alibaba. We'll watch Google. Let's take a look at Google on the weekly. Yeah, it's holding that 50-week moving average. Well, actually, no, it's down a little bit. Yeah, I don't know. Maybe it will just close below. We won't have to worry about it. And then silver. So silver right now would be a buy because it's above 30. This is right on the bubble, and Alibaba is not there yet. So, all right. So let's go my current positions, and maybe we'll start getting out of those. So DDM, double leverage Dow, that one looks fine. The 200-day is my trailing stop. Facebook. Let's take a look and see what the... So we're only down $91 or 91 on the Dow now. We'll wait and watch, but I don't think this is going to close back above, but who knows. AT&T, we're getting out because we rejected the 70-day, but boy, that was a nice trade, wasn't it? I'll be buying the S&P. Visa is attempting to rally. I'm glad that I got one profit target. This is in an uptrend, so my profit targets, generally you hear me talk about, I'm taking a 10% here, 10% here, 10% there. This is a counter trend trade, so I actually got out of about 22% of my position here, which is nice. Whenever I have a counter trend trade, I tend to get out of a larger percentage than if I'm taking a trend trade. If I have a trend trade, each profit target I'll probably get out 10%. If I have a counter trend trade, each profit target I'll probably take 20 to 22. But if you watch the video that I just did on how I phase out, it's on my YouTube channel. Hopefully that will explain it a little better, in more detail than I'm explaining it right now. All right, so Visa is fine. Close back above here is would be my stop, and Verizon. So we've got about 12 minutes. Explain how you use the weekly and the monthly to show support. Okay, I will. I'll do that. I'll do that after the market closes, Bruce. At the end, can you talk a little bit about selling puts for income? Yes, I will. I certainly will. All right. So Alibaba is hanging there, not quite 30. Google be interesting to see how what happens with the volume here in the last 10 minutes. And then silver. Yeah. You know, using the phasing and the variety of different trading approaches, you know, the last 2 days have, you know, been down days, but for me, they've been nice, profitable trades. And you know, I attribute that to my phasing out. So watch that video and maybe you can start incorporating it into your trading as well. All right. That is where he also uses the weekly and monthly to figure out where to sell the puts. Yep, that's exactly right. That's exactly right, Bruce. Yeah. I look at the monthly and the weekly charts as well as the dailies. I'd like to see a confirmation of support on 3 different time frames, at the very least 2. But you know, for selling a put, if I look at, you know, Intel on 1 time frame, it looks good. On the next, you know, on the monthly, it looks good. On the weekly, it looks good. On the daily, it looks good. Then I have a confirmation that a certain price has support, technical support on all 3 time frames. That makes me feel a lot more comfortable with selling a put there. Yeah. All right. All right, so we're getting down to the wire. Alibaba may get there, so close back above the 30 is what I would be looking for. Google above 1144.94, so we are actually under it at this point. So that if this closes under, then it's definitely off the table. And then silver looks okay. So what I'm going to do, I'm going to go ahead, I'm just going to enter my silver position now. It's going to be a half position, and I'm doing it based upon that it was underneath the 30 and then closed above the 30. Hopefully closes above the 30, I should say.
Order partially filled.
All right.
Order filled. Order partially filled.
All right.
Order filled.
All right, so silver we got filled at 1356. Now this is not going to be a long-term trade. I mean, if it goes up, I will continue to keep in the trade, but this is most likely going to be a 2 or 3 day trade. My target will be a 50 RSI up in here, so I'm looking for a 2, 3, 4 day trade that hits the 50 RSI, and then if it rejects it, I'll just go ahead and lock in the profits. All right. So Alibaba, it's getting close. It is getting close, folks. And then Google. So between Alibaba and Google, I would have to say I would have to go with Google. They're both a little too correlated for me to take both positions. So I think Google is going to be the safer move there, and it's not as low as RSI, and it has some support underneath it. Alibaba would be fine. I mean, it's fine as it is if it were to close above the 30, but on the other hand, we have the 200-day above, where the Google we're actually above it now. Alibaba, it was above the price. Now the 200-day moving average here is below the price. Let me take a look here. All right. All right, so we've got about 5 minutes, 11:44:94. All right, I better start unloading. So I'm going to go ahead. I'm going to get out of the AT&T trade and the Verizon trades.
Order partially filled.
All right.
Order filled. Order partially filled.
All right.
Order filled.
All right, so the telecommunications are gone and locked in. And I'm going to go ahead and buy my SPY position. This is the overnight SPY position.
Order filled. Order filled.
All right, so SPY is taken care of. $284.18. All right. So we've got our silver position and our SPY position. Visa, we are holding that short. AT&T, we are out of the position. DDM is holding. Verizon, we are out of the position. Okay, so now it's going to come down to Google closing above 11:44.94, and currently it is, well, we have 2 minutes. All right, so let me get this keyed up here. So all right.
Order filled.
Got about 45 seconds. And I'm going to go ahead and buy Google because it
Order
does
filled.
look like. All right. And we got filled at Google at $11:45.98. Well, we didn't have to push it to the very last second, thankfully. All right, we've got 5 seconds.
Order cancelled.
Okay, so DDM, we're fine. Facebook, I got out of, closing underneath. Google, we got in. AT&T, we got out. Locked in that profit. Silver, we got in because it closed back above the 30 RSI. SPY, we entered at the end of the day. Verizon, we're still Visa, we're still short, and Verizon, we got out of the trade. Boy, that was a nice trade. So all right, so before we get into questions and answers, I just do want to put in my quick little plug and let everyone know that I do offer private one-on-one teaching and coaching lessons in the evening time via Skype. And just so you know what that looks like, generally I have a phone call or a Skype call with a prospective student first, just to kind of get to understand them better and what their position is and how long they've been trading, their experience. And then I try to put together a program for them that will fit their lifestyle, their financial situation, and how much time they want to spend in front of the screen. So I'll try to create something that will work for them. So anyway, if that's of interest to you, please let me know. My hourly rates and my contact information are in the description of this video. And then also, if you found anything helpful today, I really appreciate it if you would hit the like button. That helps with the rankings on Google, and feel free to share this on social media, and let's build this channel. And so okay, that's my plug. And so let's take a look here. So the question was, let's see. All right, so Bruce says, how do you use the weekly and the monthly to show support? Okay. And then Ron asked was talking about selling puts. Well, I'm gonna look at this. I'm gonna kill two birds with one stone here. So if I look at multiple time frames on Apple, so here's the monthly chart. So there should be some support at this 20-month moving average, right? So there should be some support here because these moving averages, they have support on whatever time frame that you're working on. So if I looked at a large picture, if I looked out on the monthly chart and I look at this, I say, okay, it at the very least should have some support at the 20-month moving average. Now, then I'll look at a smaller time frame. Well, see, I put this here about 176. Then I look at the smaller time frame. Well, look at that. On the weekly time frame, on the monthly it was on the 20. On the weekly time frame, see how that dovetails into this 100-week moving average? So on the monthly, I'm finding support about 176. On the weekly, it looks like I'm finding support at 176 because of the 100-week moving average. And then if I go to the daily, it doesn't line up exactly, but it does it's pretty close to the 100-day moving average on the daily as well. And it is about a 30 RSI. So do you see how you have confirmation in 3 time zones there? On the monthly, catching support at the 20. On the weekly chart, catching support at the 100-week moving average, and at the daily in the neighborhood of the 100-day, but almost exactly to the 30 RSI. So that's what I mean by looking at something in multiple time frames and trying to find support for a certain price that match up in all 3 time frames. And then Ron was asked, can you talk a little bit about selling puts? So yeah, so selling a put, you're selling an option most people buy options, but selling options, you're the one that gets the premium. So like on Apple, for instance, we just looked at this. I could sell a put down here at 176 for, let's say, Friday. If it does not get down there, I get all the premium. I get to keep all the premium. If it does get down there, then I'm contractually obligated to buy it, but I still get the premium. So the thing I like about selling puts is you're able to get a premium for selling the put, and you're also only contractually obligated to buy it if it gets to the price you want. So in a sense, you're getting paid to wait until it gets to the price that you want. So, when I do this though, I look at a stock and I look at all these different time frames, because selling puts can be dangerous. So I really want to make sure that there is support there for that stock when I'm selling that put in several different time frames. So I hope that makes sense. Options is, a whole other world, but I'd have to say my favorite option play is selling puts, because I'm able to overlay my technical analysis on it. So anyway, I hope that makes sense. And the closer this would be the strike price, the 176. The closer you get to your strike price, the higher the premium. The further away, then the lower premium you get. I mean, if we take it to an extreme and I say, hey, I want to buy Apple next Friday only if it gets to $140, well, I could do that, but I'm probably only going to get $2. You know what I mean? So anyway, I hope that explained a little bit. But when you're selling a put, you're hoping that a stock is not going to go down to a certain price, and if it stays above that, by the time it expires, you get to keep all the premium. But if it goes down to that price, closes below it, then you are responsible to buy the stock at that strike price that you had in your contract. But then you have it at the price you want and you got the premium. So I do that for income. I sell weekly puts generally. Sometimes I sell monthly, but generally, like I write one today, it expires on Friday. But it's a good little way to generate some additional income and also to give you a little bit of diversity in your trading approaches. That is where he also uses the weekly, monthly to figure out where to sell the put. Yeah, that's right. And it, not just for selling puts. I mean, you on this Apple situation, even if we're not talking about puts, I'm like, okay, here's some support here at the 20-month moving average. Here's some support at the 100-week moving average at the same price. On the daily, as we mentioned, that price is literally dovetailing with the 30 RSI on the daily. So, if Apple gets down here, comes back up, I'm definitely going to buy it. Just because it's at a 30 RSI, and that should be some support. But I also have support on the weekly of the 100-day moving average, or 100-week moving average, and on the monthly at the 20-month moving average. SQ is still getting whomped. Let's take a look. Yeah, it is getting whomped. I probably would not do anything with SQ unless the 5 crosses back over the 20-day moving average. That's a good back-tested system for Q, the 5 EMA crossing over the 20 EMA, and or it possibly getting to the 30 RSI. Hey, Greg, this is from William. Hi, William. Hey, Greg, when you go through your watch list, what catches your eye first, or what do you first look at? RSI, MA information? It's a good question, William. I would have to say the first thing that I always look at before anything is the price above or below the 200-day moving average. That's my first criteria, because if it's under the 200-day, I usually don't do anything with it unless we, get to a 30 RSI or have a double bottom with a divergence or something like that. But, going through my watch list, you'll see me get rid of most things that are under the 200-day, because something that's under the 200-day, the people that buy at the 200-day, it was not strong enough for those people to even hold it up. So And then the 200-day makes a big, it defines how much I buy of a position, a full position or half position. But for like right off the bat, well, here, let me do a test run. Let's just take Etsy. So, the first thing my eye goes to is this is over the 200-day. So that's a plus, right? So that's a good plus check in the plus column. The second thing I generally look at is what is the RSI. And then I look and see, do I have moving averages above me or are they below me? So, and then I probably look at the MACD, and then I probably look at the RSI. But in order, I would say, if it's at above or below the 200-day moving average, then I look at the RSI to tell me, are we under 50 RSI or over 50 RSI? Then I look at the moving averages, and then I look at the MACD. So, and then if that all looks good, then the last thing that I will start looking at, William, are V1, V2s. Because the V1 and V2 are the entry triggers. That's the price action that's telling me to get in the trade. But I'm not going to just take a V1 or V2 willy-nilly. I have to make sure the bigger picture, I have to make sure the context of the chart, like stuff we just talked about, 200-day, where's the RSI, is it above moving averages? So, it's like painting. That's the big background. And then the V1, V2 are just the little details. If the context of the chart looks good, then looking for a V1 or a V2. Does that answer your question, William? Okay, Bruce, I will have a good hike. Thanks, buddy. I will watch out for lightning too. So anyway, boy, I'm really thrilled that we had a nice up day today, even with this market. So does anyone else have any questions? All right. Well, I just want to remind you, if you get some time, watch my video on the phasing out. It took me several years to develop that formula, and it really works well for me. And if you have any questions about it when you watch the video, if you're not quite sure, feel free to just email me. My email's down in the description. So, all right. So listen, if we don't have any more questions, I guess we will call it for the day. And thank you so much for coming by. I appreciate you spending the time with me, and I hope you're learning some things. And I hope you have the rest of the day, good rest of the day, and also hope to see you tomorrow on Tuesday during the last hour of the market. So, all right, everybody, thank you so much, and talk to you soon. Bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.